Hello crypto friends, it's me again. Welcome back to the technical analysis playlist. Last week we explored trend, so uptrend, downtrend, sideways or ranging market cycles, and how we traders make money on the bounce. We explored a very beginner friendly strategy on how to make money in an uptrend, and today we're going to dive a little bit deeper into support and resistance levels. We did brush upon that a little bit in the last video, but we're going to dive a little bit deeper into that and how we can zoom out from that in order to find these support and resistance levels on a bigger scale. Support and resistance is one of the most widely used concepts in technical analysis, yet many traders have their own idea of how these should be measured. We can all agree on the basics though, which is what we're going to explore today in this video. We can draw diagonal support and resistance lines or horizontal support and resistance lines. Let's go over to my laptop and have a little look at the vertical ones first. We explored uptrend in the previous video. Let me leave a little link here that you can click on. If you haven't watched that video, make sure you go and watch it before you watch this one, because otherwise you might not understand what we're talking about here. As we were saying in the previous video, we can only confirm an uptrend if we have 3 higher highs and 3 higher lows. So let's have a little look. I'm going to draw this out for you. What? My pen literally melted somehow. This is like so weird. Like I managed to melt my pen. I don't know if this is going to work. It works. Burnt it. Is it even healthy to put toxic material on my skin like that? What was I thinking? In an uptrend, we have phase 1, phase 2, phase 1, phase 2. As we said before, we call this a cycle. Let's say price starts at $1, it goes up, and then up here hits $2. So it stops at this point here and then turns back down. This here we can call resistance because it didn't go beyond this area here. So this is resistance. And then when price goes down and it hits this point here at, let's say, $1.50 for example, then we can call this support. Price goes back up, hits about $3, hits a resistance because it doesn't go beyond before it turns back down. Let's say it hits here and then it goes back up. So we have resistance, support, resistance, support. Usually we draw a trend line, and these touches here, these key areas of support that touch or maybe get close to our trend line. Sorry, this looks a little bit messy right now. Let's draw a trend line along here, connecting the low points. So connecting support. So we have price, and then these areas here, they reach a low before they turn back up. And this is where we have a support level in an uptrend. These key areas here are areas of support in an uptrend. This is when your support is a diagonal line. Let's have a look in a downtrend. Downtrend, price is at $20, goes down to 18 for example, goes back up to 19 for example, goes back down to, let's say, 16, goes back up to 17. Here, here, here are key areas of resistance in a downtrend. Here, here, here are key areas of support. We draw a trend line in a downtrend connecting the highs. And this here, this is your trend line. So this is your diagonal level of support. In an uptrend, we draw the trend line from the bottom, so it becomes support. And in a downtrend, we draw the trend line from the top, so it becomes resistance. Let's have a look at horizontal levels now. Price, as we said in the previous video, goes up and down, up and down, up and down, up and down, up and down. And then we can identify a level of support down here. See, prices touch, touch, touch. And then we can identify a level of resistance up here. As we mentioned in the previous video, support and resistance are areas. It's not precise. So sometimes price could go a little bit beyond these areas here. Okay, and so we draw this as more of an area instead of a very precise number. And the same can happen up here. This would be more of an area. When working with horizontal levels, I like to look out for at least 2 touches in order to confirm a level of support or resistance. The more touches, the stronger the level. So if we have 2 touches, then it's a bit of a weaker level than if we have 10 touches, for example. If you have 10 touches, then it's really strong. And I'll explain what that means in a second. Let's have a look at a real chart. See how we have a few areas here that hit more or less the same price level. And so if we were to draw some horizontal lines on this chart, it would look a bit like this. As we can see, we have some key levels here right here, right here, right here. And as we said, there are levels. So you see how the wick goes a little bit underneath, but that's fine. Here, 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 and this one goes beyond. We can say that within this area here, we had quite a strong area of resistance and quite a strong area of support, where price has turned at these points. Price has reached these points and then turned back. When price breaks through this area, what can very often happen is that what was resistance now becomes support. Price turns here, 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 and here. Price goes up and then comes back to these key levels of support before going back up again. Let's use an uptrend this time as an example. Here we have price turning. Price isn't returning to the same levels, but we have this here. In trading, very often we like to consider more where price is closed. So if we were to draw a trend line here, it would look like this. This is another example of how resistance can become support and how support can become resistance. This line here is support, stops here, goes back up, comes down, stops here. There's a little thing here, stops here, up, stops here. So these are key points. Here it stops twice actually. Price goes up, stops here, up and down, stops here. So you have stops here. So there's many touches along the way where price turns when it hits the trend line. Price touches the trend line several times before eventually breaking through the trend line. When price breaks through the trend line, what can happen and what very often happens is that price now goes back up, hits the trend line again. So we have another touch on the trend line here before it goes back down and then continues to do its thing. So in this example, we had support, and then when price is hitting the top of the line, it becomes resistance. The trend line is support when it's at the bottom, and then resistance when it's at the top. If we go back to the previous one with horizontal lines, notice we have the price fluctuations, and then it breaks beyond this key level of resistance, and then this level of resistance becomes support, and price continues to bounce off support. And then if you notice here, there's another little level here of support. So as we said, price can go a little bit underneath, but if we notice, price has also created a little level here of support. It's very tiny, we don't need to consider it, but then it bounces off this level of support before going back up again. So just to recap, we had support, resistance, we were watching the price, we're waiting for it to break either support or resistance, because when price is broken either support or resistance, it's usually going to go in one direction or the other. So if it's broken support, it's very likely going to go down, and that's where we make money. And if it's broken resistance, then it's very likely going to go up, and that's where we make money. So as traders, we wait while price is contained within the range. We wait for it to break, and then we capitalize on the break. We were waiting. Poof! Didn't quite do much. It's not a guarantee, but then, phew. So had we gotten in here, if our stop loss was here, it would have kicked us out. But otherwise, if it didn't kick us out at around here, and this does happen, you have your stop loss in the right place, and then price just moves a little bit too much to the downside and kicks you out before going right up to the moon. So, and unfortunately, there's nothing we can do about it because you can't really predict the market 100%. You can only have an idea with technical analysis of where price is likely going to go next. It's not 100% certainty or guarantee that price is going to do what you predict it's going to do. But if we place enough trades, then we're more likely going to have more winning trades than losing trades. And then at the end, we make money. Here, price has gone up. If we didn't get kicked out here, then we would have made money on the way up. So wait while this is happening. Get in, and then, yeah, we would have gotten kicked out here, which is not good. But if the price did stay within this level and we didn't get kicked out, then it would have consolidated for a bit, and then it would have gone up, and then we would have capitalized on all of this. On a previous video in this playlist, in the technical analysis playlist, we spoke about trend and how, let's say, for example, in an uptrend, you get higher lows, higher lows, higher lows, and then if you get a lower low, then that breaks the trend. Let's put it into perspective. A higher low, a higher low, higher low, higher low, higher low, quite a few higher lows. Boom, 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 boom. And then boof, we have a lower low. As we said before, a lower low in an uptrend can indicate that the trend is finito. Okay, it's done. So let's have a look at what happens next. Price comes back up, it hits our trend line, which was our support line, and now is our resistance line, because what happens? Price bounces off of it and comes back down, and then we have consolidation. We have a ranging market, a sideways market. There's a dance that does this, right? What's the name of that dance? Macarena? Is it la Macarena? Dale a tu cuerpo alegría Macarena, que tu cuerpo para la alegría cosa buena. Dale a tu cuerpo alegría Macarena. Hey Macarena! Wow! It wasn't quite this. What was this one? Oh no. This one is I said hey ha the hey do you know that song? Comment below if you do. I know you want to know the secret to make the money. Okay, and we're going to get to that right now. We traders, when we trade support and resistance levels, we look out for the bounce or for the break. Let's have a look at bounce. We buy the bounce when price hits support. When price hits support, we know it might bounce back up. And so we get in just a little bit after it's bounced off. So we need a bit of a confirmation. So when price bounces off the trend line, then we get in on the following candlestick if we can, because sometimes we can't. Sometimes the candlestick just goes whoosh, like it goes like whoosh, and we just can't get in. It's like it's gone. You know, when it's gone, like hasta luego, like when it's gone, then just leave it, okay? You need to just be okay with the fact that you've missed the move. What you can do is you can go and look at another chart and see if you can find an entry opportunity on another chart. And what can happen as well is that we traders, we wait for a setup. We patiently wait, or very impatiently sometimes, wait for a setup to happen. And then when we finally get that beautiful sweet spot, that beautiful entry spot, then all of a sudden our setup gets messed up completely. So we've been waiting for this setup and we've been watching and stalking it. And then all of a sudden, poof. So you need to be prepared for that mentally. Another very, very, very serious and strict rule when it comes to trading is do not chase the market. If your setup has gone kaput, then leave it, okay? Leave it there, let it be, and go look at another chart or go for a walk. Or do some meditation or something. Get your calm back. Let's have a look on how we trade the bounce, which I explained in my previous video, but I'll explain it here just in case you haven't watched the previous video, which you should have, but I forgive you if you haven't. We have our trend line and then we have price action. But if we've seen all of that, that's already too late to get in. We want to look out for a market cycle, which is what we also explained in the previous video. It was pretty packed, it was pre-packed. Trend line, phase 1, phase 2, phase 1, phase 2. Ooh, lovely. Price is going a little bit like this. We get in here and then price hopefully keeps going like that. And so this here, that's the bounce. Okay, so we trade the bounce. Okay, yeah, money. But I did mention trade the break, and I did not explain that in a previous video yet. What is trading the break? Let's have a look. We have our levels here. We have support and we have resistance and we have a bit of price action happening in between here. And then price goes up. Oh! And we wait because a lot of traders will get in here. We'll get in here. Yeah, a lot of traders will be like, okay, it's broken through resistance. A lot of traders are going to be like, it's broken through resistance. I'm impatient. I've got to get in. But the way I learned it in my trading school and what has always worked for me so far is to wait. If you miss it, you miss it. You know, you miss it, it's fine. You know, you gotta be patient with the trading, okay? So we wait. Now, it depends on your trading style. You can get in there, but I think it's riskier. I think it's a little bit riskier. I want confirmation because I don't want to lose my hardly earned money. Not so hardly earned money, because I just sit here all day and watch the charts. I don't think that's hard. I really don't. I don't think that's hard. Let me show you my strategy, how I do it. I would wait for price to come here and for this now to become support and then to bounce off. Now I'm happy to get in on the bounce here, okay? So this is me trading the break, but I'm also kind of trading the bounce. I get in here and then hopefully, luckily for me, price goes up and I make the cash. Fake breakouts. What are fake breakouts? Let's have a look. It's a bit like what we saw before. Can't do anything about it. Just curl up in a corner and cry. A false breakout is the following. Be careful with this, but you can't really do anything about it. Sometimes your technical analysis and everything is spot on, but the charts just don't want to do what you want them to do. That's why you got to trade periodically in order to be profitable as a trader. You got to place enough trades because there's going to be losing trades always. No trader has no losing trades. There's going to be losing trades and there's going to be winning trades. But if you trade enough and you follow the rules, then most of your trades should be winning trades, which will make up for the losing trades. Support, resistance. Ding, 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 ding. Boom. Haha, I am buying myself my own private jet. And then it goes deep, deep. Can't do anything about that. There's going to be false breakouts in the market and you just have to be good with it. You're not always going to win the money, okay? Sometimes you will lose the money. You want to minimize your losses by using a stop loss, which we will cover in another video. I do suggest you trade using a stop loss because price can fall down for a very long time before it goes back up again. Just another thing before we wrap it up, I'd like to emphasize on the fact that the more bounces, so the more touches when it comes to your resistance and your support levels, the stronger. So the more the price holds these levels, the stronger the breakout should be. Support, resistance, price. Sorry, this is really bad. This is not very artistic at all. And then, whoo, wow. So it's been containing itself within this range. Obviously there was like downtrends and there was uptrends within this and more uptrends and downtrends. There was the whole shebang here happening in between, right? So you could have made money here, 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 here. So this is a very zoomed out chart. We're very zoomed out. And now price has broken these key levels of resistance and support. It broke the resistance. So a lot of traders think, wow, price is going to move very, very fiercely now. Because we have 1, 2, 3, 4, 5, 6, 7, 8, maybe 9, given, past history. 1, 2, 3, 4, 5, 6, 7, 8. That is a lot of touches. When this happens, then we traders, we would expect. We watch out for these things because that's when you can become pretty well off financially. Price goes up and then oh, let me put my stop loss up, and then it goes up, oh, let me put my stop loss up a bit more, and so you're kind of trailing the price up and you keep making those profits on the way out. In my trading school, we learn how to be non-emotional when it comes to looking at the charts, very robotic and emotionless. Can you say that? I don't know, but yeah, we're meant to not have emotions, but I have done that for way too long. I like to feel the joy of cashing out, and I have learned to deal with losses. If I lose a trade now, what's the word? I don't really care. It doesn't hurt me psychologically or emotionally because you only lose like a tiny percentage of what you could have gained. And sometimes you make 10%, sometimes you make 20%, and sometimes you make 30%. But then when you lose, you probably lose 2%, 3%, or 5%. So, and then if you win more trades than you lose, then you can do the maths. It works out. it works out to do this full time. This is not even a full-time job. Like, you can do this part-time. You can wake up at 5 a.m. in the morning, or it doesn't have to be 5, that's just me. You can wake up at whatever time you like, and you can place 1 or 2 or 3 trades and just have your parameters set so that they automatically get triggered. And you can go out and you can play football, or you can go for a swim, or you can do whatever you want to do, and come back and maybe, you know, you've made some money. Or maybe you've lost some money. But either way, it's cool. It's cool. Celebrate the wins, maybe not the losses, but let's be neutral about the losses, but celebrate the wins. I am totally going against the rules with this kind of mindset, but it works for me. Doesn't mean you have to do it. You don't have to do it. I'm just like a happy person, you know? So I don't like to be, if I'm trading most of my time, like if I'm sitting in front of the laptop most of my time trading, I'm not just going to be serious, okay? I'm not just going to sit there and be serious, like, you know, I'm sorry. But I'll be serious when I lose. Okay, enough of that sidetracking. One more important thing, which is probably a little bit too advanced for the level of this video, is that we have the candlestick and then we have the wick. Let me draw that. A candlestick. And we have the wick, this and this. These are wicks or shadows. Beautiful handwriting, huh? Some traders will not consider the wicks or the shadows. They'll draw the line connecting the close of the candles, and they wouldn't consider the wicks, the shadows, even though here we've dropped a little bit below the trend line, but you can see how price is closed on the trend line here because the candlestick is closed. And then when you look here, for a moment here, this trend line, instead of becoming support, becomes resistance for a moment here. So this could also be a false breakout. It's a very efficient way to draw your lines, to just consider the close of the candle. As a beginner, your eyes are not going to be trained yet in order to detect these candles. There's too much going on in the chart, even with just the candlesticks alone. So you can change the chart from a candlestick chart to a line chart, and that's going to make it so much easier for you to identify these key levels of resistance and support. It could be a little bit tricky to know exactly where to place the trend line as a beginner. So if you go up here and you see how it says candlesticks, if you change that to line, then see how you've got the points? It makes it so much easier to connect them. And you can draw the line along the points. See how they touch beautifully. So we have a touch here, and then we have, see how price went below the trend line and then came back and almost touched, went back down, touched the trend line. This one has touched the trend line. That's touched, that's even like glided along the trend line. And so as a beginner, it is so much easier to identify these key levels of resistance and support when using a line chart. So go from candlesticks to line chart just temporarily in order to identify these key areas, draw the lines on the chart, and then change back to candlesticks, because we love to read price action in order to make better financial decisions on the chart. So from here, if we go back and we go candles, then you can see how the line has been drawn perfectly. Maybe we can find another example. Let's switch to the hourly, and we want to identify some horizontal levels now. Just to give an example of that. You can zoom out quite a lot in order to find these key areas. And look, we've identified one here. And this is using candlesticks. Now I'm very zoomed out, right? But here, see how price has stopped here, here, almost here, but here there's a few touches here. If we change this and turn it into a line chart, then does it not make it a lot more obvious? Look here, this area here. We could probably even just draw it as a line. That's our area of resistance. If we make it a little bit bigger, then we can see we have 1, 2, 3, 4 touches. And now if we change it to candlesticks, there we go. That is our level of resistance. And the same will be for support. I'm not going to show support. You can have a little play around. Go to tradingview.com and play around with the chart. If that seems too intimidating, then grab a picture off Google and just try to identify key areas of resistance and support. And have a look at candlesticks. Go back to my previous videos in this playlist and rewatch the videos on candlesticks, because we're going to be using candlesticks a lot in the future, so make sure you understand how to read them before moving on to the next video in this playlist. And we'll wrap it up here. I think that was quite a lot of information. I hope you learned a lot with this video. Please remember to subscribe and to like this video, and I'll see you in the next lesson. Have an awesome day. Bye-bye. bye.